$125,000 I invested into stocks in the past few days. In this video here today, folks, we're going to go through exactly what stocks I bought, how big these opportunities are, and there's quite a few opportunities I see out there in the market right now that are going to, let's just call it, be very profitable opportunities over this next year or two. So we're going to go through what those positions are. I took some recent profits on a stock and redeployed some of that capital elsewhere. All these moves were made in my public account, which is now $3.1 million plus, which is extremely exciting because this is a portfolio I started back in like 2018. I've made every move in there. I've shown every single move I've ever made in that portfolio in the public, in obviously my private stock group over time in this public account. And the 5-year run's been incredible. Calculated by Fidelity Investments, we've averaged 27% per year return over the past 5 years as calculated by Fidelity Investments, as versus 15% for the S&P 500. And that includes 2022, which was a brutal year. I mean, an absolutely brutal year to be in the market. Anybody that was in that market knows how vicious that was. So yeah, it's been a heck of a run, and there's a lot of opportunities out there. We're going to go over some of those in this video here today. All I need from you guys, one thing only, as the sign in my garage says right there, smash a like button. That's all I need from you guys. 90% of people do not hit the like button, and for the 10% of people that do, I appreciate you. And for anybody that's in the 90% that does not smash the like button, if you want to join over to the other side and be part of that 10% that does it, I appreciate you guys. Thank you. Everybody also subscribe to the channel. I want to say congratulations, big congratulations. We've had so many members over the past few months hit 7 figures in their portfolio for the first time, 6 figures in their portfolios, right? These are two gentlemen inside my private stock group that just recently hit 7 figures plus in their portfolios and got sent their awards. So congratulations to these gentlemen. And I have a ton of people, I mean a ridiculous amount of people that have hit 6 figures plus. So we have a bunch of new folks in the 6-figure Hall of Fame as well. So congratulations to obviously everybody hitting new milestones, whether you're in my private stock group or whether you're not. Congratulations to everybody. It's incredible to see that, man. And we send these awards out to everybody in the private stock group who hits these milestones. They just have to send us screenshots of their portfolio, prove that they got the money there, right? And then we send those awards complimentary inside the private stock group. Something I've been fortunate to do, and it's just, you know, we all root for each other. There's a lot of people that root for me, man. A lot of you guys root for me. You want to see my portfolios hit new all-time highs and new all-time highs, and I root for you guys back. And that's why one of the reasons I do that. It's very expensive for me to do that. Like, if you're a private stock group member, you don't have to pay for that. You don't pay for the shipping and handling. You don't pay for those awards, which are very expensive, and those awards are heavy and all that stuff, right? But for me, it's just like, it's great to give back, and it's great to see people hit milestones and being proud of that, right? Because it's big. Like, when you hit 6 figures in your portfolio, 7 figures, it's a big milestone, and I think it's cool to send something that like represents that success over time. And then through the bear markets, we're there to get everybody through the bear markets, right? And all the members, you know, we think differently in a bear market, right? Bear market, how you stay positive in a bear market, it's all about adding great positions at great prices, right? And how many shares are you getting of this particular stock versus this type of market is a lot more celebratory. It's a lot more, celebrating the milestones of like hitting new milestones and just smashing it, just killing it in these markets. And then the bear markets, just always put your portfolio in a position where you weather those bear markets, right? Come out to the other side for the next bull market and have a ton of fun again, right? And that's just the name of the game. That's what we do. And yeah, man, just phenomenal for me to see everybody having so much success out there, right? If you're looking to apply to join my private stock group, I'll put that as pinned comment down there today. That's access to all my courses, access to my private Discord chat, everything like that, right? As well as we can, bundle 1000xstocks.com in there as well. Okay, that will be pinned comment. Click on that, fill out a form. We'll see if we can get you access this weekend or next week. Okay, alrighty, guys. First stock up here I bought that is a pretty big buy. Ready for this one? AMD, Advanced Micro Devices. 400 shares I added on December 9th. I was at $132.26. So big buy for me, $52,000 plus here, right? Now, something I want to explain to everybody, because I don't know if I've ever properly explained this before, and I want to make sure everybody understands this, right? Because you see here it says margin. So you know I always preach against ever buying stocks on margin, right? So you see that and it's like, wait a minute, how's this work? Like, are you buying on a margin? Not really. So I have all my portfolios set up for margin, but that does not mean I actually actively take out margin. The reason I do my portfolios like this is, let's say I put $20,000 in a portfolio, right? I make a deposit like that. Fidelity of investments will allow me to buy immediately, even though the money hasn't cleared, right? Because the money takes several days to clear from, let's say, whatever bank I send it from, right, over to Fidelity Investments. But through, if you have, margin on your portfolio through some of the Fidelity Investments, they will allow you to buy right away. So I don't have to wait that 3-day span for the money to clear. Same thing if I go to sell a stock. The money doesn't technically settle for 3 trading days, right? But if I go sell a stock right now, I can go buy another stock right away if I choose to do so because I have margin enabled. But I never actually am technically on margin, right? And so the way I would kind of put it, so the only way you go negative on margin is if your available to trade goes negative. So if your available to trade goes negative, then you're on margin. Now you're using actual debt money to buy stocks. If you're just kind of waiting for the money to clear, it's not really like that, right? And so the way I'd kind of put it to you guys like this, it's like using a credit card, right? My wife uses credit cards and I use credit cards to buy everything. We never pay interest. Well, how do we never pay interest on a credit card? Because we always pay it off right away. Same exact thing in a margin account in a portfolio. As long as the money clears right when it's supposed to clear, you never have to pay the margin, right? So if you look at my margin interest accrued, $0, right? And it's like that every single month because I never take it over, right? So I technically could utilize $1.7 million in extra margin buying power, but that's a bad idea. That's a very, very bad idea. So this is why I enable margin. Now, some people, it might not make sense if you're the type of person that you have no self-control. If you have no self-control and you're going to be too tempted to use the amount there, don't set up a margin account, even if you're worried about the money clearing, essentially, because you might be too tempted. For me, I see $1.7 million sitting there and I don't care at all. It means nothing to me. I have no, because I've been hurt by margin before. In the past 16 years, I utilized margin twice and it hurt me both times really bad. And both times I walked away from that saying never again. And so there will be no third situation in regards to that, right? So I just wanted to explain that to everybody so you can understand. It's basically like using a credit card. It's just as long as the money clears, you don't ever have to worry about paying interest off, okay? So very important kind of lesson there. Now, in regards to AMD, here's the deal, okay? We're getting major tax loss harvesting on this stock. That's happened really over the past couple months here. Now, this does not come as a surprise to me, right? And you might look at a stock like AMD and you might say, why would there be tax loss harvest on a stock? It's not like it's really a down position. The stock's roughly flat so far this year, right? Whereas usually when you think about tax loss harvesting on a stock, usually think about stocks that are down 20, 30, 40% for the year, 50%, those ones facing tax loss harvesting. AMD is a sneaky tax loss harvest stock. Here's why. This is a situation where this stock ran to $160, $180, and well over $200 earlier this year, right? And so during those time periods, if you were buying the stock, which clearly there was immense buying pressure on the stock at those times, you're down big on the position. So the same type of people that are usually going to buy AMD might also buy a Meta or Tesla or stocks like that. So let's say you got to write off some of your profits you've taken on Tesla or Meta or Palantir or whatever those sorts of stocks are, right? Well, people will look at a stock like AMD and they're like, I've lost money on this stock, so I'm going to go ahead and tax loss harvest. So that doesn't surprise me at all that a stock like AMD has faced a tax loss harvest in this situation. It's people just looking to kind of offset, gains they've had this year, right? Which, as a new buyer to this stock, I'm like, I'll gladly take your shares off you guys. It's a win-win for everybody, right? They get to write off losses on AMD against gains they have in other stocks, right? And here I am, I'm getting to get these shares at very attractive valuation, so everybody wins in the end. It's a very happy situation, right? It's not a zero-sum game. No. It's interesting. I don't know if you guys know I have a reaction channel called Jeremy Lefebvre Makes Money, and I react to a ton of different articles or videos on that channel, right? It's a very different kind of format than this particular channel I have where it's just me talking about, whatever I'm talking about, right? So it's interesting. I reacted to a video. I don't remember which one it was, if it was this video or this video or this video, but in the past few days I reacted to one specific clip where this woman was talking about semis are not the play for 2025. Software is a play for 2025. Now, if you look at how semiconductor stocks have really reacted for the last 6 months, look at NVIDIA, look at AMD the last 6 months. They've gone a whole lot of nowhere the last 6 months. So ultimately, she's correct in people positioning there, but she's might not be correct in the frame of thought of thinking about semis will not be the play. Because at the end of the day, there's one thing I do know. And it's that every time Wall Street comes back to NVIDIA, Wall Street comes back to AMD, they want to own those stocks. They can avoid them for a certain amount of time, but at the end of the day, they're coming back. And they will buy these stocks up again, right? And so I wouldn't necessarily bank that software is a play. Software has actually been a great play this year. If you look at many of the software stocks, look at Salesforce, look at Palantir, right? You can look at a whole host of software-related companies. Like those stocks have really thrived this year. And so people are a little late to the game in regards to playing that if they're trying to catch up to the software play now. You're just late. That's the bottom line there. You're just late, right? And semis will come back. Now, in terms of my cases in regards to AMD, I showed this recently on a video, but I want to show it to you guys again that maybe haven't seen it, or those of you guys that have seen it, you can kind of get this reiterated. So first I'm looking at my ultra bearish case. This is like my worst case scenario I could foresee for AMD for the next few years. So 2025 is basically like a guarantee that they have revenue go 25% plus up in 25 with net income of like 200%. It's almost a guarantee, right? So the only debate around AMD really is 2026 through 2028. So in this scenario, I have AMD not growing revenue at all during those years, or net income for 3 straight years, which would be the absolute worst case scenario. Like, I couldn't even imagine a scenario. I tried to imagine a scenario, I guess, but it's just so ridiculous to imagine AMD with all the growth in all these different chip areas, including data center, right, and AI chips and everything. I would call this like a 2%, 1% probability that they had 0% revenue growth for 3 years. But if that happened, you would have to slap a 10 or a 15 PE on the stock because they had no growth rate, which means the stock would be somewhere around $54 to $81 in 2028, right? Which right now it's $130 stock, so that would be 130 roughly, right? So that would be very disappointing scenario. But this is so ridiculous and unrealistic, it's not even funny. But that's my ultra bear case for AMD. What about my bear case? This is a more realistic downside scenario for AMD, right? You got the 25%, 200% that are almost guarantees for 25, and then 2026 to 2028, my bear case, I have them only doing 15% revenue growth, which would be a huge disappointment for Lisa Su and the whole team at AMD. If they only average 15% revenue for those 3 years, it would be disappointing, right? Only average 20% net income during those years, huge disappointment if they do that, right? So slap a 20 to 25 PE, which is extremely fair for the stock, gives me a compounding annual growth rate of 9% on the low end, 16% on the high end. That would put the stock in 2028, right, which we're about to go into 2025. That would put the stock in 2028 somewhere between about $187 and about $234 in that bear scenario. This is what I expect to actually happen for AMD. This is my base case. Now keep in mind, even my base case many times can be a little more conservative. I'd rather be a little more conservative on my base case than a little more aggressive, right? This is my base case. I'm expecting revenue to average at 25% per year for the next 4 years. 2025, 2026, 2027, and 2028 all be 25% revenue growth. Now, 2026 to 2028, I believe their net income is going to grow at a much faster clip than revenue, so I have them doing 35% net income growth per year. Gets them to net income margins of 34% come 2028, which I think is in the realm of possibility for AMD. You could easily put a 30 to 40 PE on the stock at those sorts of growth rates, which would then put the stock somewhere around $400 to $500 to low $500 range in 2028, and right now I'm paying $130. So this is what I expect to happen for AMD. This is why it's such a great opportunity here, because my scenario has a stock over the next few years going to $400 to $500. And I don't think this is like, whoa, that's like going to be impossible for AMD. Like, I think they can pull that off, right? Now, here's my bull case for AMD. This is where things go really, really well, right? 2025, if things are looking really good for the business, they should be able to do about 35% revenue growth. And then I have them doing 35% on average 2026 to 2028, right? Net income growth of 50% on the bottom line puts them at net income margins of 35% come 2028. 35 to 45 PE is easy. If they're growing top line 35% and bottom line 50%, like 35 to 45 is cake in regards to PE ratio. That puts the stock somewhere around $639 on the low end to $822 on the high end, right? Compound annual growth rate of 49% and 58% on the high end there. That's pretty darn bullish, right? So this isn't crazy. Like, this is something that Lisa Su and the team could pull off, right? It is a bullish scenario, but it's not like this is like some pie in the sky. I would put this probability at, I'd put it around a 10% chance, right? Like my bull case and my bear case, I usually put those at about 10% each, right? The ultra bear case and the ultra bull case are kind of more in the 1 to 2% range, and then like, you know, the base case is like that heavy, like 70% plus probability is, you know, roughly what I expect there. Now my ultra bullish case for AMD here is they grow revenue 50% per year 2025 through 2028, right? And then they do 75% net income growth 2026 through 2028 per year. Puts them in net income margins of 36% in 2028. 55 to 75 PE if they have those sorts of growth rates. That's easy. That puts a stock between $1,595 and $2,175. Low probability this plays out, right? Low probability. I'd call it a 1 to 2% chance, same as my ultra bear case, but it is pretty exciting to see like what is really possible if they really put up some crazy numbers. So, moral of the story is here in regards to AMD, you can see why I'm buying the stock. And this might not be the last time we touch on AMD in this video. We might come back to it in a bit, right? So something to keep in mind there. Next stock I went ahead and bought is Cheesecake Factory. Big buy for me in regards to cake. 555 shares of cake. That's a $27,425 move. That's I bought those shares at $49.41. Now, very important in regards to this. In regards to cake, right, I'm raising my cost basis substantially by keeping on buying the stock at these sorts of prices, right, which shows such a huge vote of confidence. It's one thing to buy a stock that you're down on, right? Like, let's say, for instance, like Nike. I think I'm down 9% or 10% in the public count on Nike stock, right? It's one thing to see me buying Nike stock because it's like, oh, that's pretty easy. Like, you thought it was a deal here. It's 10% lower. Like, it's an easy buy, right? It's much harder, at least for me personally, to buy stocks I'm already up 20% plus on, right? And to keep raising my cost basis. And so for Cheesecake Factory, right, even after the offset of the new cost basis, I'm still up 29% on the stock, up $31,000. That does not include dividends. So then shows definitely, I think, a vote of confidence for me on how much I believe Cheesecake Factory is deeply discounted right now, right? Now, additionally, I want to show you guys the dividends here because right now Cheesecake's paying out 27 cents per share you own in regards to dividends. I believe they are going to up that amount in 2025, maybe to 33 cents, 35 cents, 40 cents, something around there, right? But for right now, they're paying 27 cents, right? So now in the public count, I have 2,777 shares. So they pay me 27 cents per share I own every 3 months. So that means I'm going to make $749.79 just in the public count alone every 3 months from the stock. And that does not include the likely dividend raises that this company is going to be doing over next year and likely following years as well. That means I make $1,500 every 6 months from Cheesecake stock and I make $3,000 per year. Obviously, the biggest money from the stock is going to be in share price appreciation over time. But it is sweet to collect those dividends and always have that dividend money incoming. And then guess what I do with that money? I redeploy it into more Cheesecake Factory shares or more shares of other stocks that I see as huge discounts, right? That's where my strategy GVD comes in clutch. Growth stocks, value stocks, dividend stocks, right? And these dividend stocks, you know when they really come in clutch? And I don't think this gets talked about enough. And one of the reasons I value these dividend stocks so important, bear markets. Guess what? Bear markets, it's hard to make money. In any stocks, right? Bear markets, like the only thing that's really printing money is put options and hedges you have on. And that's it. And so it's very difficult to make money in bear markets unless you got the timing right as far as betting against that bear market, right? All your stock positions, all your long positions are probably going negative. It's just a question of how negative are they going, right? If the market goes down 30%, let's say S&P 500, and some positions for you are only down 15 or 20%, you're winning, right? That's a win. Like you're outperforming the stock market. But at the end of the day, it's still down. So it's nice when you have that dividend money incoming in a bear market, right? You can redeploy that money out there into stocks at deep discounts. Remember this, folks. There's a reason. There's a lot of reasons why I own some of these dividend stocks. They come in clutch, man. They come in so clutch. Now, Cheesecake's my favorite small cap stock for the next 5 to 10 years. And that's why I don't mind buying more shares and upping my cost base. I don't care because it's still such a great deal. They got the Cheesecake Factory, which is their ATM machine, right? Additionally, I have North Italia and Flower Child, which are smash concepts. Flower Child's probably the biggest opportunity for the company since Cheesecake Factory. And if you combine North Italia and Flower Child, I believe in 10 years from now, we'll look, probably even 5 years from now, and we'll be like, whoa, those two opportunities in itself was bigger than the Cheesecake Factory. Bigger than the Cheesecake Factory if you combine those two, right? And then we got several different concepts that are in testing phase right now to see if those are the next big North Italians and flower childs around the United States of America, right? I spoke about this stock quite a bit recently. I did not include it in my six stocks to buy and hold forever video, right? That came out last week. I honestly probably could have. When you think about Cheesecake and you think about them making it through Rona, you think about them making it through the great financial crisis and all the crap they've made it through, I could have probably included in that video, but I did not include it in my 6 stocks to buy and hold forever. But I just thought I probably could have, honestly. If I recall, Cheesecake was the first stock, or certainly one of the stocks I mentioned on 5 stocks I'm buying December edition. So if you guys haven't got a chance to check out that video, you might want to check that out when this one's over. 5 stocks I'm buying December 2025 there, right? Alrighty, next stock I bought here is... Oh, this one's not a stock. This is put options, folks. Yes, put options. Toll Brothers put options. Toll Brothers, by the way, is a very high-end home builder, the highest-end home builder in the public markets. Average selling price around Toll is around $1 million roughly, okay? Now, I bought some put options on Toll. These ones expire September 19th, 2025. This does not mean I have to hold these all the way until September 19th, 2025. There's actually a good probability I could sell these put options off in the next few weeks or maybe even in the next few months, okay? Now, the strike price on these is $170. I paid $26.56, which means my break even on the stock is around $144, okay? Now, that's assuming I held it all the way to this date. But since I probably won't, like there's an opportunity I could sell for a big profit way before and not even have to mess with worrying about taking those all the way to September, right? Somebody would be willing to buy those off me. So for instance, right now I have 11 contracts in the public count. This is a little bit over a 1% hedge right now because it's $37,000. Public count's at 3.1 million. So do the math on that. It's a little over a 1% hedge, which usually for my hedges, I like those to be between 1 and 3%, depending upon how negative I am in the market and how, good of an opportunity I see, right? So far we're up 23% on this hedge. We're up $7,000 so far. I'm good with that hedge where it's at. But I can tell you, if Toll Brothers keeps going down short term, I might end up covering that hedge, right? Like, let's say Toll dumps. Let's say it goes down to 130, 120 in the short term. I would say the high probability I would just get out, right? And just not even worry about holding it any further past that and say, hey, I'll let you guys worry about the stress of holding that all the way to September. But that's if Toll Brothers actually kept falling here. If it doesn't, and it holds kind of where it's at right now or goes up a little bit, I'll probably continue to hold these into because I always think about the hedges as really insurance for the portfolio. It makes me feel comfortable. And if the market ever goes south, right? Let's say the S&P 500 goes down 10%. That's not even like a huge move down for the S&P. But let's just say it happens, right? Let's say we get to January and all of a sudden the market dumps, S&P 500 down 10%. Toll Brothers probably goes down 20%, 30% in that sort of market, right? Which means these put options would probably appreciate to maybe from $37,000 in value to they would probably appreciate to $60,000, $70,000, maybe $80,000 of value. I would then sell out of that position. Let's say take my $70,000, and then guess what I'm going to do with that? The S&P 500 is down 10%. I'm going to buy some extraordinary stocks at some extraordinary valuations, right? So it's kind of like the same concept of taking the dividend money in a down market and reinvesting that into opportunities out there. So it's insurance, it's portfolio insurance, but I posted this inside the private stock group. What was this? Oh, no. Actually, I don't think I posted this one inside the private stock group. I'm going to show you guys a few that I posted recently. But this is just since the beginning of December. Look at Toll. Toll's just off a cliff. It's just down, down, down. It's down 16% since around the beginning of December versus the Qs are up 3% and the SP 500 are around flat or slight profit, right? That's fascinating because their earnings came out and their earnings weren't actually bad. I said signed contract values is a real positive for Toll in the quarter. Backlog continues to be down. If signed contracts turn negative for them in 2025, things will deteriorate quickly. However, if signed contracts they have stay strong, then the stock's going to be hard to move down in any major way. But people are starting to get fearful in regards to Toll Brothers and are starting to cash profits on this one because they see that backlog going down. So all it would take for Toll to get really ugly really quickly here is if net signed contract value starts going down as well, then you could be talking about backlog starts to dump heavy, and you could start to talk about Toll would have to start cutting prices significantly, which starts to hit margins, and all of a sudden you get into a situation where Toll starts to cut, others start to cut, and the worst enemy for Toll Brothers, I've been talking to you guys about this, the worst enemy for Toll Brothers is I'm seeing more and more inventory come online specifically in that $1 million plus bracket, there's no, let me be very clear with everybody watching this right now. There's no shortage of inventory in the $1 million plus bracket. In many of these markets Toll Brothers is at. I keep track of a lot of the markets Toll Brothers big in, like the very important markets. And I'm just telling you guys, like my city, Vegas, you want $1 million plus house right now? It's a buyer's market. I can tell you it's a buyer's market. There's homes everywhere. Every guard-gated exclusive community in Vegas has many homes. Some of them have 10, 20, 30 homes available in some of these guard-gated communities in Las Vegas. There's no shortage. And I'm seeing that in other cities as well. I'm seeing that out in Arizona as well. I'm seeing that in the Phoenix metropolitan area. I'm seeing that in Scottsdale. I'm telling you guys, like, it's a buyer's market for that $1 million plus, and that is going to be tough for Toll to compete with. Because you look at the price of some of these Toll Brothers new builds versus now existing inventory, the $1 million is piled up, that's going to make it tough for them, right? So this is something I think a lot of people should consider in regards to Toll Brothers specifically, right? Now, additionally, I wanted to show everybody this, because when Toll Brothers stock falls, it falls rapidly. Now, these were screenshots I posted inside the Toll Brothers chat, inside my private group, back in October, if I recall. And at that time, Toll Brothers stock was $158 a share. And I was just trying to show how quickly this stock can really deteriorate when things kind of go south for it. So right here in 2022, you had a 40% drawdown right there, right? Now, additionally, if you look right here, this is a Rona crash. That was over a 50% drawdown very, very quickly. So just in the past few years, you had a 40% drawdown roughly and an over 50% drawdown. If you look right here, this was 2018, this is basically from the beginning of 2018, kind of into the end of 2018, 40% drawdown right there. Keep in mind, that's not a real estate crash. Like, there was no real estate crash that happened there. And even right here, this wasn't a real estate crash either. Toll Brother numbers were better than they ever been. Their backlog was more full than it's ever been. And Toll Brothers still had a 40% drawdown, despite their backlog being the strongest in the company's history, right? And the earnings being the most incredible in the company's history, and the margins and all those things, and the stock still had a 40% drawdown. 40% drawdown there, right? Look at this one. This was kind of mid, like summer 2015 into the beginning of 2016, 40% drawdown there. When Toll Brothers moves down, the move can be violent, like really violent, really quick. This isn't the great financial crisis. Actually, this is prior to the great financial crisis. This is from kind of, let's call it the second half of 2005 into the second half of 2006. Toll Brothers stock had a 50% plus drawdown. This is before people were even talking about a real estate crash, right? This is way before people were talking about a real estate crash or the economy is in a horrible place. This is way before that. And the stock already fell 50+%. Then the stock starts to come back to life, right? And this is from the first half 2007 into the first half of 2009. The stock does another 50% plus drawdown from where it was at there to where it went there, right? And that's kind of where the stock bottomed out at, and then it started to slowly move up over the next few years. So when Toll Brothers gets ugly, it gets ugly in a hurry. Like literally that stock can fall 30, 40, 50% in a matter of a few months. It doesn't take years. It takes a few months and Toll Brothers down 30, 40, 50%. And so that's why I like Toll Brothers as a hedge. And I'm okay if let's say Toll Brothers stock just goes to some new all-time high and it's like, 2 months from now it's $180 or $200, whatever, okay? Like, that's fine. Like, I lost my portfolio insurance. I look at it no different than you look at health insurance, car insurance, homeowners insurance, renters insurance, any of that stuff. That's the same. I expect to lose it, but just in case I need it, it's there, right? That's what's important in regards to this. Next one I bought here is, more AMD. This is December 10th. I bought another 100 shares here. Paid $128.23 for those shares. This was just under a $13,000 move in regards to AMD. Additionally, on the 11th of December, I bought another 55 shares of AMD. I paid $128.95 for those AMD shares there. That was about a $7,000 move. Now, you see me. I'm moving rapidly into AMD. I don't usually build out a position this quickly. This is very quick in regards to AMD. This is a rapid build out for the stock. 555 shares I'm now up to in the public count. $72,000 move. When you see me buying a stock this rapidly, right? Like this is a stock I didn't even own in the public account, what, like a week ago or so? And now to see me already at $72,000, I don't usually build stock that quick. It usually, like I'll build a stock into a big position over 3-6 months, maybe a year or something like that. What does this mean that I'm building out this position this rapidly? It means I feel I have to move with urgency here. It means I don't think I have all the time in the world. If I thought I got 12, 18, 24 months to buy AMD, this is, I wouldn't add this aggressively. I'm adding this aggressively to AMD because I don't think I had that time. I think my time's limited in regards to AMD in getting it at these sorts of prices. I think I might have a few more weeks. I didn't say months, I said a few more weeks. I could be wrong on that. And I would be the happiest camper if I can still be buying AMD stock at $120 something or less in 6 months from now. I'll be the happiest camper. I'll be so happy I was wrong about that because I'll just be adding more shares because I wouldn't mind putting $200,000 in AMD. But I don't believe I have that sort of time. I believe I have weeks to add AMD, not months, before this one starts to move. So I'll be a happiest camper if I'm wrong on that. But that's why I'm doing it, right? Now, additionally, I did a video about 3 days ago or so now, buy AMD stock and don't stop buying. If you haven't got to check out that one, you might want to check out that one if you care about AMD. If you don't care about AMD stock, it's irrelevant to you, right? But if you care about AMD, it might be a video worth checking out when this one's over, okay? Next stock I bought here is the Monster, MNST. Obviously, I think everybody watching this should know Monster. They're a massive energy drink company. They own the Monster brand, which the amount of drinks they just have in the Monster brand is insane. They own Rain Energy, Bang Energy, and several different other energy drink brands as well. They're like the big dog in the space other than Red Bull, right? Like them and Red Bull pretty much dominate the energy drink industry around the world, literally. Now, when it comes to Monster, I added another 111 shares here. I paid $52.62 for those particular shares. And the reason I did that is because I've also been buying Celsius in the public account. Now, I'm doing a $2 to $1 ratio in regards to Celsius versus Monster. So I put about $57,000 into Celsius, and I've had my 2-to-1 ratio almost perfect. Now at this point in time, right? I have put $29,000 into Monster. Now, the thing I'll say about Monster and Celsius is I wouldn't expect me to continue to buy these stocks very heavy. Unless they go down big. Like if Celsius goes back to $25, which I have doubts it's going to go back down to $25 now that I think tax loss harvesting's over in regards to this one, at least the major tax loss harvesting, or Monster was to go to like $45 or below, I think I'm pretty good on the buys here. But, if these ones went down in any substantial way, you'll see me continue to buy them. So that's kind of where I'm at here. If you add up the amounts, right, I have invested, we can call it roughly, $100,000 or just a little under $100,000 invested into these two stocks. So I'm good with what I have. But if they went down a bunch, I wouldn't mind adding some more shares. These are the type of stocks that I feel comfortable holding in recessions, holding in good times, good economic times, bad economic times. Like people are still going to drink their dang energy drinks. That's just the way that's going to be, right? Next stock I bought here might come as a surprise. I haven't been buying the stock recently. So this is going to be a big one for a lot of folks, I think. I bought Planet. I bought the Planet. Yeah. 29,000 shares. By the way, it took a while to fill that order. It was incredible. It took I think several minutes to fill that order. It's just 29,000 shares. I didn't even think it was that much. I paid 38 cents a share for the Planet shares, right? That was about $11,000 move. Now, in regards to Planet, I understand the whole MJ space has been so negative for the past several years. No one's wanted any of these stocks and those sorts of things, right? And then a lot of votes didn't go the way people wanted them to go in regards to Florida legalization in this space, right? The government's moving slow. Federal legalization, we're still waiting. Descheduling, we're still waiting. It's just been a pain. And that's why these stocks have just, not done much the last couple of years. But I think people are too negative on this space. And I think there's actually some things to be pretty excited about. When we look at Planet's balance sheet here, this is as of their latest quarter. They had $27 million plus in cash, which for a company Planet's size is actually a significant number. Total stockholder equity is up to $150 million in this company now at this point in time as of the latest quarter. Excuse me. Now, if you look at their latest financial results, they're showing a lot of improvement, folks. I mean, a lot of improvement. And it's actually improving rapidly here. If you look at their September 2023 quarter versus their September 2024 quarter, Their gross profit went from $11 million to $16.6 million. That's substantial, folks. Run the math on that. Last time I checked, that's around a 50%-ish range improvement, is it not? Huge. Their gross profit's exploding to the upside, and I don't see that really slowing down anytime soon. Now, additionally, if you look at loss from operations, it's $3.3 million, right? Which looks like a big number, fair, right? But keep in mind, depreciation was $2.3 million of that. That's a non-cash expense, depreciation, right? So the reality is it's not as bad as it looks, right? If you look at their loss before provision for income taxes, $2.9 million. This versus depreciation of $2.3 million. So we're talking about only about a $600,000-ish real kind of loss before income taxes there. So the planet's balance sheet and income statement are actually in far healthier spots than I think the stock reflects. Like looking at the stock price at 38 cents, you would think this company's just done. They're done. And then you start to look at the balance sheet and the income statement, and you're like, I don't know about that, right? So the moral of the story is here in regards to Planet, things are getting much better for the stock, and I don't think that's going to stop anytime soon. I think things are going to continue to get better for the Planet for honestly at least the next several years. And so I think they're going to eventually get to a profit from operations here, likely in not too distant in the future. And then how are you going to keep Planet down at 38 cents when they start having a profit from operations? Like, that's just not going to make sense anymore at that point in time, right? There's too big of a long-term opportunity in this space. We know there's a massive amount of Americans that use this product, right? That's not changing. And so likely the Planet's going to be one of the biggest beneficiaries, and they're taking advantage in a very down market because a lot of the players in this space have gone BK or they're in rough positions, and the Planet's acquiring assets right now for very cheap prices, and they got the balance sheet to pull it off. And they also are there with the way their income statement's trending and the way that, I mean, if they start pulling in $20 million plus a gross profit, it's going to be hard for this company to keep losing money in terms of a loss from operations. Like, it's almost going to be impossible. And then if they explode that up to 25 mil or 30 mil, the stories could get very exciting very quickly here, which is why I'm just willing to take a little risk here, right? Now, in regards to Planet, right? You know, anything that's a spec stock, you always got to keep in mind with spec stocks and hedges, don't risk the farm in these stocks. That's where people get into trouble with these, is they risk too much money. If you look at how much money I risked in the Planet, it's like, if Planet didn't make it, if they went under, it's not going to like magically change my net worth. It's not like, oh, that, you know, I'm done for. I wouldn't even notice it, to be quite frank. But if Planet is really that opportunity, if they're that 10x, 100x opportunity, right? I will notice that. I can tell you that much. Because that 1% position in the public account, if they 10x or 100x, it's going to become a whole lot bigger than a 1% portfolio position, right? Without me buying another share. So that's what I do with these spec stocks. I treat them as like, if it's really that crazy opportunity, I want to make so much money off of a very small amount put in, it's going to be ridiculous. And if I don't, right, and they go under, it's not changing it. Like, it's not like, oh, I can't run my fountain. I better shut the pool fountain off because can't afford that electricity. I better not run the spa because I can't afford the natural gas, the heat on that. No. It doesn't mean a thing, right? That's how you want to position in the spec stocks and hedges. If it works, it's going to print money. If it doesn't work, oh well. That's not like you're going hungry at night, right? So that's an important thing. Where people get in trouble is they got that get rich, die trying. And let's say you got a 100K portfolio and you're risking 50,000 on spec stocks. You could be in a lot of trouble very, very quickly, folks, okay? Hope you enjoyed today's video. I appreciate y'all joining me as always. Pin comment down there if you're ready to take your investing knowledge up to a much higher level, you're ready to take investing very serious. Pin comment down there will be to apply to join my private stock group, get access to all of my best premium courses, as well as my exclusive Discord chat, access to 1000xstocks.com. If you want that bundled in, we can put that for you. Our entire research platform that I use on a day in, day out basis. We'll send you your Steel membership cards in the mail, and then once you hit 6 figures and 7 figures, we'll send you those trophies to your home, okay? All right, guys, much love, and have a great day.